So now we're giving two assets now. The first one is Solana and the second one is Ordinal. From both assets that we're given, you can actually see the market cap, 128 million. Ordinal is $128 million, and Solana is 55 point something $billion as the market cap. Now, in terms of allocation of funds, if you have like um, if you see a good position to enter for both of these assets, which do you think for security as a risk management strategy, which do you think would have a better chunk of your capital when you want to make investment? Now, this is 128 million as market cap, while Solana is 55 point something billion as the market cap. So if you want to make investments, let's say you have $1,000 and you were given these two assets. Let's say these are the only two assets that you want to invest in, that they are good, they have futuristic potential because of the maybe you do your other research, because Ordinance is more like it allows assets to be built on the Bitcoin blockchain. You get, and you know that Solana recently has gotten a lot of recognition. Why? Because most main coins are built on Solana. And so therefore, you want to invest in Solana, you want to invest in Audi. Now, this is the market cap of Audi, 128 million, while Solana is 55 point something million. Now, taking risk management into consideration, if you want to actually manage risk effectively, you get, so, and you want to spread your investment. So you know that you have to spread your investment based on the risk class. So a higher percentage of your investment would have to go to the lower risk class. Now, with both market cap, this market cap of 128 million and Solana, whose market cap is around 50 something billion, which do you think should have more of your capital, like a better chunk of your capital? Not all. Which do you think should have a better chunk of the capital if you are looking at minimizing the risk in the positions that you are opening? So I want to give room for answers. You get, based on the question that we just asked now, which do you think should have a better chunk of your investment capital if you are to invest? And give me your reasons. So if you are to invest, would you spread it 50-50, or would you spread 60-40? Would you spread 70-30 between these two assets if you have $1,000 to invest? Or how would you do your investment if you're giving Solana and Audi? Okay, that's the first question. So I want somebody who can actually answer this question to come up and see if they can answer. Just indicate by raising or using the chat section. So no. Okay, so I need this to be as interactive as possible. You're giving Solana. Now you are aware you've done all the necessary research around the assets. You've done all the necessary research. But the only thing now we're considering, both of them, Solana and Audi, both of them, they are good assets to invest in. But one has 55 point something billion as the market cap, one has 128 billion. What would be your investment decision based on this information? If you are a risk manager, what would be your investment decision? What chunk of your capital will go to which and to which? Who should take more and who should take less? And give me your reason for that. I need somebody to indicate now. I don't think I should be talking alone. I need this more like interactive. So if you have something to say, Abdulaziz Mohammed, you don't have anything to say with respect to what we just talked about. Adeyinka, Adeniyi, you don't have anything to say based on the question, or is the question confusing? If you feel the question is confusing, you can type in the chat box. Aliya Yakubu, okay, someone. Okay, Sabi. Okay. Somebody else.
Hello.
Yes, Sabi.
Hello. Good evening.
Yeah, good evening.
Thank you for the knowledge so far. So,
Yeah.
from my understanding, I think I will devote more of the capital to Solana.
Okay.
Probably 60 ratio 60-40
Okay. Why?
because of the higher market cap of Solana.
What's the significance for you?
is significant. That's
Why?
just my view.
Why do you think why would the higher market cap make you to invest more of your money?
Uh, I can't say.
I want somebody that will give me, okay, John said, Audi will have a better of my capital because the market cap easily double. What I'm asking you to take into consideration is not profit margin. I'm asking you to do, based on risk assessment, we should have a better of your capital. Now, if you want to, you're going to change your answer, let me know. Based on, I think Audi will take more of my investment because he has a low market cap compared to Solana that is high and a billion. I'm asking,
Okay, okay.
risk management. So we have to think of risk assessment because when you are investing, most times the reason why people do what they want to do is because we play around investment is because we don't have so much money to invest. You get, but imagine you're investing billions or millions. You get of your currency. I'm not even going into millions in dollars. But let's say you're investing millions of your currency. Sabi, what country are you from? Sabi,
Pardon?
what country are you from? Sabi, what country? Are you Nigerian? Are you
Nigeria, Nigeria.
so? Let's say you're investing 10 million. You said, according to you, you put more in Solana than Audi because it has a higher market cap. Although you don't know the significance, right? Okay. So, John, Anifok, John, let me just stick to John. Uh, and, oh, okay, John, you said something. I am interested in your opinion. Okay, there's somebody else who is raising and Ufonobong. Okay, Ufonobong, I've asked you to unmute. Unmute your mic.
Good evening, my mentor.
Yeah, good evening.
Yeah, good evening, every other person in the class. To add my voice to the debate in the class, in my own opinion, I think I will go for the token with the lower uh, market cap. My reason is this: it has the capacity to expand the market cap.
Okay,
With Solana that
this is sorry.
already has a very high.
What I'm asking,
Okay.
doing a risk assessment with proper risk assessment
Okay.
with your decision
Okay.
to which based on which you think has a higher risk, lower risk, doing a risk assessment, would your decision still stand for investing more in OD than Solana based on what I just said? Like, so let's say we're not just looking at profit alone. You get potentials for profit can be high,
Okay.
but when you do a risk assessment,
Yeah.
you still put more of your money in OD than in Solana.
No, I think I will go for Solana,
Okay, why?
given the fact that it has been there over time.
Okay.
That is the only reason as a newbie that I know. It has popularity.
Okay. Okay. No problem. It's all right. It's all right. Thank you
Yeah.
for adding.
Thank you.
Thank you for adding your voice. Okay, John. I want to hear you, John.
Okay. Good evening, Mr. Kings.
Yeah. Good evening.
Okay, for me, I think though I was looking at the profitability aspect because while I said so, because all the looking at the market cap, you can it can easily, the market cap can easily double. Like if more people invest, it will take much people in Solana for the as in for the market cap to double than
That's for investment to do.
in OD. Yes.
Okay. Continue.
So that was why I actually said so.
Okay. No problem. It's okay. Now, Shadrach Cross, let me unmute you. So let me know your opinion also. You stated your opinion.
Okay. Uh, Thank you very much, Mr. Cross. Mr. King, I appreciate. Hope you can hear me very
I
well.
can hear you clearly. I can hear you clearly.
Okay. Like why I said Audi, since Audi have a lower market cap, I think they have a potential of the price to be a lower than the Solana. Since Solana have a high market cap and more people are in that system right now, so the system is the market is already jam packed. Why the all the have a low market cap and they have a potential to rise since the asset is also a good asset. So if I have my money, I put more money in Audi, why the market cap is low and the price of the asset will also be lower than Solana. So if the market should come up, mean that I have more assets, more put more money on Audi, have a higher potential to have more gain or double of my price of my asset of my investment when the price is up. So I think this is why the reason why I will choose to put more money, more investment in Audi than Solana at this case. Maybe this is my opinion.
Thank you very much. It's been a very
I
well.
appreciate.
I like the fact that you guys have voiced all your opinions. But if there's something I have observed in everybody voicing their opinion is that everybody was just focused about on the profit rather than the risk. I think just few persons have talked about the risk. Okay, the first person, Sabi, said Solana, but then he was not very. His reason was not very emphatic. You get, he did not actually give his reason very clearly why he said Solana. The thing is, what most people do not anticipate when you're investing is that the investment can go both ways. So while your focus can be on the profit, you understand, you should also consider in an event where there's a reverse, the thing is not profitable for you. You get, and then your bulk of your money is in the smaller market cap because Audi now, for example, may be a good asset. Do you understand? Because we've done research. But if it does not pan out, if Audi does not pan out the way it wants to, and then you put a bulk of your money in Audi, you can begin to see significant decrease or decline in your investment within a very short period in time. For example, for people who may have invested in low market cap assets at this time, the kind of losses they are in or the kind of retracements they've collected from the market around this time is different from people who invested in high market cap assets. For example, if you invested in BTC for $1,000 in BTC by now, maybe you would have been down a couple of tens. You understand? So a couple of tens you get because of how the market is. But there are some assets that if you invested $1,000 at this time, so if you invest in Solana, which is around 55 billion in market cap, and you invest in Audi, which is around 100 and something million in market cap. It's just that now, today we said that 200 million was liquidated out of the market, right? 200 million was liquidated out of the market. So if 200 million, for example, leaves Solana, you are not even going to get a 15% decrease. You understand? You get, but 200 million cannot leave Audi. And if you invest $1,000, you'll be seeing your investments will be intense. It's not even possible. So, but as the market cap of Audi is around 120 million, you get, if 60 million leaves the market, your $1,000 is $500. If 70 million leaves the market, your $1,000 is around $400 thereabout. Do you understand? It's around $400. So because you are trying to do a risk assessment, while you are still looking out for future gain, your part of your goal is to see how you can still protect your capital in the event that the market does not go in the way that you are anticipating. Do you understand? in the event that the market does not go in the way I'm anticipating. That's why if you're investing, you have $1,000. I like using these round figures so that it's just easy to calculate. You have $1,000 and you have some low cap assets, low market cap asset. Because there's some assets you see, the market cap will be around 50 million. The market cap can be around 5 million as at the time. Have you seen assets that the market cap is around 5 million and then you are rushing all in? Because if you have this mind that it's just all about the profit that you're looking at, then invest in an asset, the market cap is 5 million. And the next thing, the next morning you wake up and see that market cap was 5 million is now 100,000. The way your money would have gone, it will be like the wind, no matter how promising the project looks. But because of the low market cap, the low valuation in the asset, few persons can significantly impact the price of that asset. So when you are looking at protecting, which is risk management, risk management 101 is protecting your finance at all costs. When you are looking at protecting your finance, your goal is not just only the potentials for profit. What of the potentials for losses? When you take that into consideration, which gives you a better security? That's why the decision a man who has so much more money has in the market, because most times when we think about investment, we play around with it, you understand? Because even for somebody, when you say people have no more than you can afford to lose, there are some persons that what they cannot afford to lose is still high enough to make very wise decisions. While there are some persons that, okay, when you say put $10, for people who are looking at investing $10, maybe $15, they gamble like this. Do you understand? They throw more of their money into low market cap assets. But if you have a higher amount of money that you want to actually put into investment, I'm going to, because once it's 10 minutes past time, this meeting, so I'm going to send a new link so all of us can still join the meeting. So, but when you have something at stake, so you may not necessarily, the money you have is significantly big enough, you are trying to make an investment decision. Your first goal would always be how to protect your investment. So in the tendency to protect your investment, you are not always looking at the flipping alone. You are looking at security. And when you look at security at times, 2x, if 2x is more secured for you than 10x, you will see that you will shock more, you put more of your investment in 2x so that the 2x can be significant. Because if you put $5,000, for example, and it gives you 2x, it means that your 5,000 becomes $10,000, right? But when you know that $5,000, if it drops down to, you know that the movement in the market will not be so abrupt that your $5,000 can turn to $2,000 overnight, or can turn to $1,000 overnight. At least you can sleep well. But there are some kind of assets with high volatility that you know that your $5,000, you can just sleep one night, and the next morning you are waking up to $800 from $5,000. You cannot have a sound sleep. So when you are investing such amount of money, for example, you want to prioritize security over the number of X's you can get in return. So therefore, using that information, and with that information, if you are giving Audi about $120 million and you are giving Solana, for example, it means that the bulk of your investment will be invested in Solana, while a smaller amount will be invested in Audi, because you are more concerned about protecting the capital that you have. But then, what now happens when you're investing in high market cap assets? Do you just throw your money in high market cap assets? No. You are now very strategic. What do I mean you are very strategic? It means that by the time you decide that you want to invest in high market cap assets, you are looking for ways that you want to enter into it at a good time. So you are not just looking at, like, for example, there are some persons that told me that they invested in BTC at around, when BTC got to $109K, and then it fell down a bit to around $100K, $100K and likes, and they invested there. I felt like they were still buying at the top.
That's the outside.
It's not a good time to actually. Hello? I felt like it was not a good time to actually make such investment. So that's when we now talk about being strategic even when investing in high market cap assets. Higher market cap assets, you now have to find a good time, a better time to actually invest. So today I'm going to be focusing on decisions for risk. Decisions for risk. Protecting your capital. That's what I'm going to be focusing on. Protecting your capital first. But then maybe the next listener will now talk about how to spot better times to enter into investments. The reality is that there's never better time to enter into investments than when there's high fear in the market. But the reality is, for most newbies, they like to enter into the market when there is high greed in the market, you understand? Because you just want to chase price. And another thing is impatience. Okay. So I would, I don't know, maybe I'm going to create a new link now that I would ask you all to join so that we can actually extend the meeting to be like an hour.
And I want to see as my takeaway from that risk assessment,
Okay.
apart from the price volatility and returns, then we should always consider security. And you said something strategic. We should be strategic. That is, we should look at the long time. What can it be? And that's another thing that I deduce to be strategic, because the strategy, and you made an analogy regards to Bitcoin. Then okay, so Bitcoin that get more popularity, more capital market, does not mean that it cannot come down, but then you should know right position to come in. You know, these are the takeaway that I can take from that risk assessment, which is very, very key. In fact, I was having that mind to say it before you brought that out. That's just my takeaway from that. Despite that, I joined it. Thank you.
Okay. Yeah, you're welcome. And I like your takeaway at the end of it, because it's very, very important. You know, one thing, I would always tell anybody who is being a part of this program that for now, for most people, whenever they are learning about investments, they are just thinking too short term. Investment is something that as you grow significantly, you would continue to invest. As you grow significantly, you continue to invest. As your income grows, you learn about investment. You are going to find ways to make investment. It means that if you're learning about investment in cryptocurrency now, or you're learning about investment in real estate, or you're learning about investment in stocks and all that, if it is not done right, there's a high tendency you begin to make unnecessary mistakes as your income grows, and then you'll be risking more. Because obviously, because I have some students in this training here that at this point in time, the only money they have is the money that's from their pocket money, and maybe one or two hustling that they do. But then they'll get to a point where they grow and they have so much more. But if the foundation of learning is so faulty, you now see where they begin to lose significant amounts of money, which is something that we try to avoid. That's why when you are learning about investment, you want to ensure that you learn from risk, you understand the risk. Because one thing I don't do is I don't try to paint a picture of everywhere would always be clean, because people are losing a lot of money in the cryptocurrency space. Why? Money is crypto space, but money is also lost. So if you focus only on profit alone, you would not understand how to bear the loss that comes with it.
Yeah.
If you focus only on profit, you don't understand. That's why you can see cases of, now this person say, make I invest. After I invest, now all my money don't go. It's because they were seeing profit. They were not seeing shouts for this at all. And when that happens, you get, when that happens, you see that a lot of people now tend to regret the reasons or their decision to start making investments. So that's one thing that we always put into consideration again. So, and when you put that into consideration, it means that your first thing, one of the first things you do is to properly assess your risk and then find a way to mitigate risk and to reduce risk whenever you are making your investment. Okay?
Yes.
Thank you.
Yeah, you're welcome.
Hello, sir. Once again, Good evening, sir, and good evening, fellow classmates. It seems to me that you have answered the question I wanted to ask, but let me still put it a different way to see how it goes. Because when I was onboarded, I think that is the terminology you will use.
Okay.
The person that onboarded me into crypto space was like, in February, that the crypto market is experiencing what people call the bearish season.
Okay.
That if anybody has money now, could buy some coin and hold. Now he told me some of the coins that based on studies in quotes now, because you lay emphasis much on proper study. So a study could be proper, a study could be improper, depending on the yardsticks or the factors that whoever is carrying the studies decided to look into. Now, supposing somebody went by that, or maybe he belonged to a class, a group, like I am belonging to your own group now.
Okay.
And it happened that at the time, I'm talking about February this year now, at that time, the mentor of that class had like mentioned few coins for members of his community to buy and hold.
Okay.
And they did.
Okay.
And it maybe Solana was one of them, for instance.
Okay.
I still remember at the time he to me about crypto, Solana was about 138 in that February, if I'm not mistaken.
Okay.
Now, the thing has grown so drastically. In fact, the magic of today is even so scary because I saw it in the morning when it was one, I think 118. Then in the afternoon, 114. And now it has become 10 something, Now, suppose somebody bought into it at the time and this decrease or falling in price is occurring. Would you now say that that study was not properly or strategically carried out? Okay. Another way of putting this question, in this class now, if you as our mentor have done your own due diligence and you are now recommending, say, one or two coins and hold, and we do so, then in the next 2-3 weeks, or maybe a month, we see the price of that coin going down so low. Yes. Would we be justified to conclude that our mentor did not do a proper study? What really comes for this proper study? Thank you, sir.
Okay. Yes. Now, let me explain. This question you asked is a question that is a burden in the minds of many persons, actually. Now, one of the things you must understand is that the financial market is always fluctuating, especially when it comes to cryptocurrency. Cryptocurrency has the highest fluctuating market. Now, for example, we are anticipating a not just a bull run, we are anticipating the altcoin season. I don't know if you understand what I'm saying, the altcoin season. So your question is now, let's say your former mentor told you Solana, and then Solana at 138 now fell down to 10 something. So does that mean that his research? No, that doesn't mean that his research at that point in time is wrong. Because the mistake most newbies make, which is what I'm trying to correct here, is that your anticipation is that once they just give you a coin, it should start rising immediately. It doesn't always work like that. A lot of times you may experience retracement. Okay. There may be significant retracements in the asset. But when someone is giving you an asset, that's why I told you that if you want to invest in cryptocurrency, remove timeline. I happen to have met, Shadrach Cross. I happen to have had personal encounter with him. One of the things I told him, because he was telling me that I wanted to make investments, that in 1 month, in 2 months' time, the money will just come like that. I told him that if you want to make investments in cryptocurrency, first of all, remove timelines. Do you understand? Remove timelines, because
Yes.
we are all retailers in the market. What does it mean to be retailers? It means that our investment is not significant enough individually to move the market. Do you get? So our investment is not
Yes, sir.
enough individually to move the market. So what we try to do is we try to actually predict. For traders, day traders, they are more interested in looking at what they can actually entering at a good time, going at a small time, getting small profit of the market. While for investors, we're looking at long term. So if you're looking at long term investment in an asset, 2 weeks, 3 weeks is nothing. For 1 month is nothing. You can make an investment and then you hold your investment for a period in time. Let me even give you very, very common Shiba Inu. I invested in Shiba Inu when Shiba Inu entered Binance first. When I invested in Shiba Inu, then I didn't invest so much. I invested $50 in Shiba Inu. It went down to $30. From $30, it went down to $25, and it went down to $20. Then I left it there.
Seriously.
Do you know how much I withdrew from Shiba Inu in the next 4 months? I withdrew $350 from Shiba Inu.
Wow.
So this is what usually happens. Why I use Shiba Inu?
Okay.
Coin that is common. This is what usually happens. Most times when you tell somebody to buy, newbies especially, that why we try to correct. When you tell them to buy an asset, they just anticipate that you have a way of knowing the market, the time that the market will rise. No, there's nobody that knows the time. That's why, in anticipation of this altcoin season, if you go online, go to like Twitter, for example, you see that different people have come up with different timelines for the altcoin seasons, for the supposed bull run. You get? They've come up with different timeline. Last October, April last year. They've come up with even this year now. People anticipating April, May. You understand? April, May, based on what happened in the last bull run and all that. So people are predicting various things. You get? But the market may not necessarily go the same way. Do you understand? In terms of timeline. You get? Because we are just retailers in the market. So the big players in the market to determine how the market go. In the cryptocurrency space, we call them whales. You know, in the forex exchange, foreign exchange market, we call them institutions, banks. You get? So they are, but the crypto space, we call them whales. These whales, they are the main players in the market that will actually determine how it goes. So when you're investing, if you have like a very short timeline, one thing I recommend is that do not put money if you have a very short timeline that you're looking at doubling your investment and everything. Now, even when you do research, you can do proper research for some assets, and then the research you do for that assets, again, just like a business, somebody can come up with a very viable business model for you. It's just beautiful and everything. But then you invest because the business model is good. It seems like something that will bring in investors and everything. So you put your money in there. But then you are not putting your money is not in competent hands. And what happens at the end of the day? So you can have faulty developers that do not meet up with the requirements that is necessary to make a very promising project to meet success. You understand? There is that aspect. That's why at times we see that when a developer, or maybe when developers are known to have done projects before that have succeeded, it's very easy to bank on the success of their previous projects to create a new project. You understand? And investors will be very much interested in new project because of the success of their previous project. It means that they've shown to be capable. But in some situations, the new venture still not even be as successful as the previous venture. The new project may not be as successful as the previous project because, you know, it happens. Anyways, so one can do a lot of research, but one thing is the fact that they asked you to buy February when it was 130 something, and then it's 108 now, it doesn't mean that that project was not research. As a matter of fact, Solana is one asset that, you know what's even funny? Okay, as at 2023, Solana was around $32. Yeah, but I wanted to invest. I didn't invest in Solana, but I invested in BNB when it was 200 and something. After it fell 2023, late 2023, I invested in BNB. I wrote BNB to when it got to 600 and something dollars, for example. You get, but Solana rose and rose and rose and rose and even got close to 200 and something. So Solana got close to 200 and some 200. I don't know. I think this exceed 200. This exceed 200. The problem I have, why?
Yeah.
Yes, I think they exceeded 200. Why I'm not really closely monitoring Solana. Only when I want to invest in Solana-based coins, that's when I buy Solana. I've not really invested in Solana individually, anyways. So now, from 200 or something, it fell to 138. So the reason why somebody is now telling you to buy at 138 is because it has fallen. You understand? So you are going to buy at a cheaper price, but it can still continue to fall. It happens. That's why, as somebody who is interested in being in the crypto space, you must anticipate the fall of this. That's what I'm saying. So most times, everybody just enters into the space. Many people just enters into the space with only the thought of positive. What if happens if there is a negative? That's what will not determine how you make your investment. So, because when you are entering with the fact that it will just rise, it will just rise and everything, you can do very crazy things by like putting your house rent, putting and everything. But then if you now goes in the opposite direction, you now begin to look for who to apportion blames to. Do you understand? So, but then
yes, sir.
there are cases of people who, after the assets have dropped down significantly, they pull their money. As soon as they pull their money, the asset begins to rise back. As it rises back, hey, I don't know where I put my money. Oh, they will not buy at a higher price than they bought initially. After buying, the asset will not begin to drop again. They would have got more money. Then, as soon as they pull out their funds, I don't know where I go buy this again. They pull back money. It has happened a lot of times. They will not pull back their money again. The assets, after the assets start rising again, they put my money, the money will not drop. By the time they've lost significant amount of money, you see them, some would have lost, for those that have not used so much money, they have lost $50 to $100. You get, because they are trying to chase price. Now, but if they are just stayed in that investment, as long as that investment is still promising, as at the time they entered, there's still a promise of it. Again, right? Next week, I'm going to look at some of the aspects I look at when I want to make investment. But it doesn't mean that there can be no retracement. So if you're not willing to wait it out, that's why some persons come to me and they'll be like, okay, I invested in this, it's down. Which I say, I want to pull out my money. Which I say, will I go and invest in that? I will just be looking. A lot of times I don't have answers to some questions that I'm asked, because I don't even know how to start answering the questions. The reason why I don't know how to start answering the questions is because my question I always ask is, what informed your decision to buy? Should be enough to
buy, okay.
Decision to hold.
Okay.
If whatever informed the decision to buy is not informing your decision to hold, you need to question your decision to buy in the first place. You get? There are certain times you look at an asset after investing and you are not, maybe there are certain things you look at and you feel like, okay, I need to pull out of this investment. It happens. We are going to look at scenarios where that has happened to me, even before now. Understand? We look at certain scenarios. I've talked about it, but I know that not everybody is in the meetings that we hold. So that's why at times I try to repeat some things I've said. But anyways, I don't know if I've been able to answer your question, Mr. Fonobong.
No, so much, so well. Thanks so mightily. I'm happy.
You're welcome. All right. So if there's another person with question, I think there was somebody that was asking question. Fediline. Yeah. I think you're asking question. Lucky Star, I would unmute you so you would also Fediline, boring. Let me just on you. Okay. Fediline. I have asked you to unmute your mic. Okay, why that's happening? Okay.
Okay. Good evening, everyone. Thank you so much, King, for all the information and knowledge you're sharing with us. So I was just going to follow up. I think you've already touched on the question I wanted to ask based on, I think, Mr. Fonobong's question. So it's more of like follow up, like maybe if you got into the market, like he was saying, like when maybe the market was slightly higher, and then based on all the analysis you've made, and now we are on a low, is it advisable, like maybe if you have some money, to invest more just to even out your investment? For example, now that the market is very low, or is it advisable for you to just maybe stay out? I don't know.
Okay, so you've invested before, and
Yes.
down.
So
Okay, explain if you have. Unmute your mic until we're done, so that at least, because I may be asking questions. What I'm asking is that you've
okay,
invested before, but now
yes,
the market is down. So your question is,
yes.
you stay out.
Like maybe if you got into the market a little bit higher,
Yeah.
and now you see like it's quite low now. Is it advisable, like maybe to invest more in some of the coins that you think are promising, with the hope that it's going to even out, or is it better to just stay out of the market and wait it out?
Okay, let me just answer it practically. For example, for me, one of the projects, you don't need to, okay. One of the projects I invested in recently is Audi, for example. I also invested in TIA and a couple of others. I think I shared them. So, but this is now the difference between me and most people here. Audi fell, I bought more. It fell, I bought more. It fell, I bought more. So what I do most times if I want to invest, I don't invest all the money at once. I invest small amounts of money. If it falls, I continue to buy and buy and buy. Today, Audi has fallen to 6. I bought Audi down to 7. I invested at around 12, 10, 9, 8, 7. It has fallen to 6 today, but I think I've exhausted the capital I actually decided to put in Audi. So it has even gone half of the initial price in which I used to enter. Whether it was around 11 point something or 12, I don't know. I think thereabouts. So I believe in the project. That's why I said what informs you to buy initially should inform you to keep buying the dip, because that way you can actually even out. It means that if when it was $12, for example, let's say I bought 10 units at $120, right? If now that is $6, for example, I will buy the same 10 units but at $60. So at the end of the day, if I calculate how much I've invested, that's 180 divided by the total units I have, which is about 20, right? Which is about 20. So if you divide 180 divided by 20, it means, right? So I invested 180, right? Divided by, I will now have 20. So what will be the math? It will be around 9. So it will now look like the price I entered was around 9. So once the asset gets to 9, rises back to $9, I've already seen my initial capital of $180 back. So if it gets to $10, I'm already in profit. $11 in profit. If it gets to the initial price in which I entered, I'm already in serious profit. You understand? So that's basically it. So if you want to stay invested, you must first of all know why the market is falling. Like now, there's a general market falling because there's high fear in the market. So when there's high fear, it's one of the best times to capitalize on it. But the thing is that it may take longer than anticipated. It may. At other times, it may just give you. But when you are able to wait it out, that's just it. That's why we tell you not to put. If you have an urgent fund, don't put it in. Don't put it in there. Especially when you just feel like maybe somebody is telling you that, don't worry, next month is when everything is going to be. Just have it in mind that it may not always happen that way. That way you are able to guide your investment. Okay, Daniel Banks. I think we have very short time now. All right, Daniel Banks, just ask a question briefly.
Yeah, good evening, King.
Good evening.
Yeah, I hope you are doing well.
Yes, I am.
Okay, we thank God. The question I wanted to ask, I think you clarified it answering our sister's question.
Okay.
But yeah, so what I want to ask is, some of us are new here. So how often do you check your trade? Because sometimes, ever since we the new ones started this thing, we are becoming so addicted to our phones, and then every seconds we want.
It's a normal thing.
Hello?
Actually. It's a normal, yeah, I can hear you. It's a normal thing, anyways. For most persons, it's actually a normal thing. They always want to check to know what exactly is
Yeah.
happening. You understand? So
Uh-huh.
not unique to you alone. It's not unique to you alone.
So
Then you will,
okay.
over time, you will grow the necessary resilience. Because there are even
Okay.
at times where, like in this period, you will get a lot of people because of the heartache that comes from checking their assets, they will be making wrong decisions. So it's a normal thing. I'm not going to. It's just you grow the resilience. You get that's why you must understand it. You know, for me personally, most times when I just go to my wallet, I see my wallet. Everybody's wallet is down now. Don't everybody's wallet is down. You get generally is down. Even if maybe there are some assets that will even give you some returns, but the general outcome of the wallet, most people's wallet is down now, as a matter of fact. But when you look at it, you already know that okay, there are certain things I looked out for that is still showing the promise in which I made my investment. I can buy the dip. That's just it. You get, but the dip continues to be deeper. All right, I will still buy the dip as much as I
Okay.
get. So it's just a normal thing that you check your investments. It's a normal thing. Me, I check mine. At times when I see because I get notifications, do you get? So at times I'm resilient that if I see notifications, I ignore. There are times days I've not gone. I've seen the market is falling, but I will just not check. But at other times, I'll just like, okay, let me see if there are some assets I want to take advantage of. I'll just go and check it out and see how it is. Then if I want to buy the dip, I buy the dip. You gain the resilience over time. You gain the resilience over time as you push forward. So
Okay.
that's the normal thing. You get, but don't
Okay.
allow fear
Okay.
and emotions guide your decision making. Your decision making
Okay.
always be from an objective point of view. Should always be objective.
Okay.
You understand? It should always be objective. It should always be coming from a place of knowledge where you know what you are doing. So I think with that you should not really have a problem. Okay.
Oh, okay. Thank you very much. And then also a quick one.
Yeah.
When you start zooming into your profits, when you realize that the price at which you bought a particular coin is increasing.
Okay.
You know, so there is this coin that I bought. I think the last time that we met, I told you about it, Omikami. And then looking at the project, it has a long-term project, and I think the coin has a lot of potential. And then with time, it's really, really going to do well in the market. So I purchased some, and then as you said, when anytime I see the price coming down, that's when I purchase more. But I don't know now. When I enter into when the coins start doing well in the market and I'm in my profit zone, at what point should I cash out?
Okay.
Or should I cash out all of them and then go to zero on that particular coin that I've bought? Or I don't know if you can also help me with
Okay.
that.
First of all, this particular asset you're talking about, at what point is it still on DEX alone? Is it on decentralized exchange?
Yeah, it's only on DEX for now.
Okay. Have you looked at the roadmap of the asset? Like, is they planned for sex listing?
Yes. Actually, they will be launching their utility and then other things.
Are they so far so good? Are they following the roadmaps?
Yes, so far so good. They are following the roadmap, but I think it's the one who the founder was part of being the ship, and then he came out from ship because of one or two issues, and then I think so far the coin is 2 years now. It's 2 years now. So far, whatever that he has promised to do, he's doing it.
Okay.
Yes, releasing it. Just
What's the market cap of
a lot of it.
What's the market cap of the asset?
Before, okay, I haven't checked, but as at yesterday, it was around 16 point something.
16 point something what?
16 points. I'm not sure, but 16.64
I said the market cap, not the price. So market cap, not the price. So
the market
cap, not the price.
16.64 million market cap.
Okay, 16.64 million. All right. Okay, so basically,
Yeah.
when it comes to profit taking, now, for example,
But I want to finish so that you put all together.
all right.
But
Okay.
I realized also that the community is also very strong. Like the community very strong, and then people are pushing, and I wish some of my colleagues here would also go and do a research on that, and then if they are also
What you
okay,
can
they
do
can.
is
Because
just drop the market cap. Just drop the contract address right there on the group.
okay, sir.
Just drop the contract
sir.
address on the group. Just the contract
sir.
address.
Okay, sir.
The contract address.
All right.
And probably your info on the coin, but don't include any link. Don't include link on the coin. Is it which of the which of the
it's
network?
It's on come again.
Which network?
It's on coin market cap, and then
So
it's built on Ethereum. Hello?
Ethereum
blockchain, yeah.
And you are buying it on DEX?
Yes, no. I'm buying it on DEX.
Okay.
Yeah.
That's one of the biggest mistakes to make anyways. Okay, but before, let me just, so that, because for the purpose of time, I'm moving a little bit at this moment. Okay. Number one, if an Ethereum, this thing is not on SEX, please.
Because very soon it will be announced on SEX very soon. So it's also part of the plan.
But you have to move it to the SEX. And moving is very expensive. Withdrawing will be very expensive. At the end of the day, you'll be spending most of your profits as network fee. You would come back and tell me what I just said now. You'll be spending most of your profit as network fee on the Ethereum blockchain network. So, but let me answer the initial question that you had. When it comes to profit taking, I would always tell you when you see some significant amount of profit, because you are invested in an asset that has it's a low market cap asset. So as it's a low market cap asset, so it has a tendency for you to easily do like 2x or 3x. So what you can actually do is when you see 2x of the market, you can decide to take some profit. You understand? So just have like a target for it based on what you're doing. Have like a target. Whenever you see profit, I don't know how much you've invested, but it depends on the kind of investment you make. That would, if you invest like $1,000 on that asset now, and then you see $200 or $300 of the market, or probably $400, you can decide to pull out a significant amount of chunk on that. Okay, but let's say you're investing like $20 of the market, you can decide to wait till the thing it 2x's on you. Then you can just remove your initial capital and just allow the profit to run. Do you understand? So depending on how the market is,
yes, sir.
You get. So, but one thing is important is that just find ways to ensure that you secure profit or secure your capital as at the point of.
Okay.
But I will recommend secure your capital, a little bit of profit, then you can leave the rest to run if you still believe in the project. Only when you believe that it's done for, then you cannot decide to say, okay, let me just leave it. You just pull out all your funds. If you've seen enough profit and you know that you don't want to start worrying about that asset, you can still pull out all your funds. So that's the only thing. See profit, secure profit. But please be mindful of Ethereum-based assets, because most of your profit will go for gas fee at the end of the day. That's something that I promise.
Okay.
All right. So I don't have so much time. I will take one more person. So Mrs. Teresa, please unmute your mic. Mrs. Teresa, ask your question briefly. Mrs. Teresa.
Okay, it's okay now. Good evening. How are you doing?
Very fine.
Please, King, there is this thing I was asking last time. I don't know if you have come across it already. They are calling it MTS, which they enter with link. They are using $500, $300.
Don't invest.
Then on Bitcoin, they play game on it.
Don't invest. But what you do is just send me the details on WhatsApp. Let me do the assessment yourself. But once there is a cap, they are start telling you put this $200 package, $300 package. Run away from every such stuff.
Okay. Because that thing they were saying is going to last 10 years, that it has started since 2 years ago.
Don't invest. It's the same thing. It's all Ponzi. Don't invest. Don't
Okay.
put your money.
Okay.
Yeah.
Okay.
Just for you. Okay.
Okay. Thank you.
Yeah. Mr. John. Aniel. Mr. John.
Okay, thank you. Good evening, Mr. James.
Yeah, good evening. Like the
Okay,
question should be
please,
fast. We have less than 10 minutes.
okay, a quick one. I want to know, is it advisable to maybe you invested in a coin along the line, the coin is going up and down. Is it advisable that when a coin goes up, you sell it and wait for when it comes down? As in, when it goes up, when it goes up a bit, you sell it and hold the USDT. When it comes down, because at this point now it's fluctuating. So
Eh,
is it advisable to put up such practice?
That's you being a trader. A trader takes advantage of short-term volatility in the market. If that's what you want to do, yes. As long as you can actually time it, analyze the market, know where it gets to, where you sell, and when it gets to where you buy, that's you being a trader. That's basically it. So it's a practice. It's a normal practice. You may not necessarily, even if you are not doing futures trading, that's you being a trader. You get. So if you're investing in long term, you're investing in long term. Most times, people who do investment in long term, they don't pursue short-term volatility. You get, but that's you being a trader, which is also a normal part of being in market. You understand? So
Okay.
some persons they do that with large funds. You see some persons they just have like this thing, they just anticipate when the market goes down, especially for a ranging market. You know what a ranging market is? The ranging market goes to support, comes back to resistance, goes to support, comes back to resistance, goes to support. So whenever it goes to support, they just buy. It gets to resistance, goes to resistance, they sell. So they do that. That's trading. So it's a common practice.
Okay, and also, what can you say about pocket option? Something on that.
When you hear option, it's called binary option. It's not, it's when you hear option, it's more like binary option. And it's not, when if you are trading crypto, you use crypto exchanges. Pocket option is not a crypto exchange.
Okay.
Okay, so we'll be joining the line here for tonight. Next Sunday, just anticipate 8 o'clock, 8:30, we have meetings. Even if I don't remember to post the update, we'll have meetings around 8 o'clock, 8 every Sunday. I told you as I came back, I'll try to be consistent. So I wish you all a very wonderful night rest. I will upload this tonight and send the link to the group. Do have a wonderful night rest. All right.